Hello, this is Connie Belden, and we're going to talk about the financial statements. We are going to look at a problem where it's given us the dollar amounts for the accounts. We're going to take those and put them into the financial statements. Notice the accounts are just listed alphabetically here. The first thing we have to do is our income statement. Income statement contains only revenues and expenses. Revenues would be fees earned, fees, professional fees. That's how it's referred to in a service business. In a merchandising business that we'll get into later on, it might be referred to as sales. But again, that's all revenues. So we have fees earned of $875. Anything with the word expense after it will be an expense. And we'll be listing those on the income statement as well, from high to low. Notice that we do have supplies, which will be an asset, and supplies expense, which will be an expense on our income statement. So it looks like our highest expense is wages at $525, followed by rent at $75, followed by supplies at $12, utilities at $38, then supplies expense at $12, then taxes expense at $10. Now, notice that miscellaneous expense is more than supplies and taxes expense at $15,000, but miscellaneous is always going to be listed last, no matter how much it is. So when we put it into an income statement, it's going to look like this. First of all, your name of your company, followed by income statement, followed by for year ended, or it could be month ended, or quarter ended, and the ending date. You begin with your revenue account, which in this case is fees earned at $875. You list that on the right side with a dollar sign, because the first number in each column will have a dollar sign in all of your financial statements. My expenses will be listed high to low, again with the exception of miscellaneous, in the left column. I'll begin with wages expense all the way through miscellaneous. Now, since wages expense is the first number in the column, I did put a dollar sign on it as well. And again, notice I list those on the left. Then what I'm going to do is add all of my expenses together. That gives me $675,000. In the next row, I will put that over in the right column and label it total operating expenses. That way my fees earned and my operating expenses are in my right column. Because to get net income, I want to take my fees earned of $875 minus my operating expenses of $675 for a net income of $200,000. Now your totals should have dollar signs and be double underlined. So again, dollar signs on the first number in each column, dollar sign and double underline on totals. Next, we will do the statement of stockholders' equity. Again, 3-line title. Just replace the middle line with statement of stockholders' equity. It will have 3 columns, one for common stock, one for retained earnings, and one for your total. So let's go back to the problem. It does say that we have common stock of $25,000 and retained earnings of $155,000. As of May 1st, that would be then beginning balances. So that's why I started out with common stock of $25,000. So that is a stock that I've issued and sold for cash to my stockholders as they've invested in my company. I give them stock, they give me cash or other assets. Retained earnings, it said again, was $155. That's the amount of net income from the corporation that's not paid out as dividends. So we retain it in the business for a total of $180. Now the next thing it says is that we did issue additional common stock of $10,000 for cash. So apparently we sold more common stock, allowing people to invest in our company. In exchange, they gave us $10,000 in cash. Also, we paid out to our stockholders $40,000 in dividends, a payment as a thank you, so to speak, for buying our stock and our company doing well. So therefore, next in the common stock column, I'll put issued common stock of 10,000. So when I add it together, I have total common stock of 35,000 issued. I will also put the 10,000 in the total column. Next, I will bring down my net income of $200,000 to the retained earnings part. And then I will list my $40,000 as a negative there for my dividends. So 155 plus 200 net income minus 40,000 paid as dividends gives me ending retained earnings of 315. And again, I'll bring the 200 and the negative 40 over to the total column. So if I add horizontally or vertically, I will get 350,000. Now notice, same rule here. $sign on the first number in each column, $sign and double underline on the totals. Now we will use this information in our balance sheet. For the balance sheet, again, we'll have a 3-line heading. We'll replace the middle line with balance sheet. And for the date line, we don't say for month or for year ended anymore. We just put the date itself, because these will be the balances as of that ending date. Now remember, you learned in this chapter that assets equal liabilities plus stockholders' equity. So therefore, we're going to have two different balances that should equal each other. The first balance will be the total of all of our assets. Be sure and refer back to my chapter notes as to what would be an asset, what would be a liability, what would be stockholders' equity. And in the problem, I see there are 3 assets listed. Cash, 156. Accounts receivable is money that's owed to you for 210. And then supplies of 9,000. Now, when we list them on the balance sheet, we do want to go most liquid to least liquid. So we always start out with cash. And if you've had sales on account, accounts receivable would be next, followed by supplies, and if you were to have them, prepaids, followed by your longer term assets, such as land, equipment, automobile. We don't have any of those in this example. So 156, 210, and 9 added together, our total assets are $375,000. Again, $sign on the first number, $sign and double underline on my total assets. That is my first total. Okay, the only liabilities that we have in this problem, money that you owe, is accounts payable of $25,000. So therefore, under liabilities, I listed accounts payable of $25,000. Since we had a grand total here, pretend as if you're starting over, so put a $sign on that. Now, that 25 will be added to our stockholders' equity. Our stockholders' equity has common stock and retained earnings. Don't use the beginning amounts. Go back to your statement of stockholders' equity. Common stock is no longer 25,000. Common stock is now 35,000. So notice I brought down the 35,000. Retained earnings may have started out at 155, but ending retained earnings is 315,000. So notice I brought down to 315. So 35 plus 315 is 350,000, which, as a double check, 350,000 was my total stockholders' equity. Now, I will take my total liabilities and my total stockholders' equity and add those together. So 25, and notice there's no underline on the 25 because it will be added to the 350, gives you 375. That's my second grand total. $sign, double underline it. Notice that the 375 total assets does equal the 375 total liabilities and stockholders' equity. Again, first number in each column has a $sign. Totals are double underlined and also have a $sign. And expenses on an income statement, with the exception of miscellaneous expense, are listed high to low. I hope this helped you out with putting together